Hey everyone, it's TransMountain from the Venture Analyst, and I'll be going over 7 Canadian stocks built for this moment. So Canada currently is actually in an interesting position. While the most investors are watching the S&P 500 flatline and trying to figure out what the Iran conflict means for American markets, the TSX is quietly outperforming, and the reason is actually structural, not temporary. Canada is a net oil exporter. Our index is weighted towards energy and materials. We have a Pacific export access through TransMountain, and we have a 81.8 billion defense reinvestment that just became politically untouchable. We have a gold sector that was already run before the weekend, and now we have a massive geopolitical premium on top of the structural bid. So today I'll be going through 7 Canadian names that I think are specifically well positioned for exactly what's happening right now. This is the free watch list. Now let's get into it. Okay, some quick context before we get into the stocks, because I want you to understand why the Canadian angle is different from just buying American names. 4 things. Canada is a net oil exporter, so high oil benefits us, it doesn't hurt us. TransMountain gives Canadian producers specific access to Asian buyers who suddenly cannot source Gulf supply, as we saw with the Hormuz. That geographic premium is real. Canada's $81.8 billion defense reinvestment just became the most politically supported spending program in the country's history. And the big 6, the most protected banking in the world, are paying 4 to 5% yields that grow every single year. The TSX and materials weighting that used to be seen as a liability, too much commodity exposure, not enough tech, is exactly the right composition for this specific macro environment. That's the structural base. Now, let's go through the names. 3 energy companies. I'll go through each one quickly because the core thesis is the same for all 3. Canadian oil with no Middle East exposure, benefiting from both the absolute oil price increase and the relative premium Canadian barrels get when the Gulf supply is uncertain. So we have Suncor Energy, Canadian Natural Resources, and Cenovus Energy. So let's start off with Suncor, SU.TO, also traded on the American market. Suncor is a complete play. It's not just an upstream oil producer, it's an integrated company with downstream refining and retail operations. When crude prices spike faster than a refined product adjusts, something called the crack spread widens. Suncor captures that on both sides. TransMountain Pacific Access active buyback program that accelerates with every dollar Brent holds above $75. This is the most comprehensive way to own Canadian oil right now. Let's talk about Canadian Natural Resources now. The longest reserve life. CNQ is a pure production story. Longest reserve life of any producer in the TSX. We're talking about decades of production capacity already booked. Break even well above the current WTI. In sustained high oil environment, this company generates much faster than management can figure out how to return it to its shareholders. It's a low sustaining capital, high free cash flow conversion. So if the oil stays elevated for months, not weeks, CNQ is where you want to be. Currently, it looks like we're heading that way. As for Cenovus Energy, it's a crack spread upside. Cenovus is the most interesting valuation story of the 3. It's an integrated producer with significant upgrading capacity. Same crack spread dynamic as Suncor, but the stock is currently cheaper on every valuation metric. Most upside if the oil sustains, worth owning alongside with one of the others if you want full sector exposure. Okay, let's start talking about gold and precious metals. Okay, gold, I want to say something about gold before we get into specific names because I know a lot of people are misunderstanding the setup right now. Gold was already up 24% in 2006 before the Iran conflict happened. Before any of this, the structural bid was already there. Central bank buying running at 190 tons per year. Dollar debasement concerns, 5 consecutive years of inflation above 2%. The geopolitical premium from this weekend is on top of the structural bid that doesn't go away when conflict ends. That matters when you think about these names. This is not just a spike trend, there's a floor underneath it. So we're going to be going over Agnico Eagle Mines and Wheaton Precious Metals, AEM.TO and WPM.TO. So as for Agnico Eagle, this is one of the names I keep coming back to for gold exposure. It's the best run senior gold miner in the TSX, has operations in Canada, Finland, Australia, nowhere near this conflict, nowhere near the Gulf Coast. When gold moves, Agnico moves 2 to 3 times as much because of the operational leverage, and unlike some other miners, Agnico actually delivers on what it promises. It has a strong balance sheet, growing production profile, and a management team with a long track record. This is the gold name you can hold through volatility without losing sleep. As for Wheaton, the streaming model, Wheaton is the clean way to own precious metals. Streaming model, they finance mines in exchange for the right to buy gold or silver at a fixed low price. When gold goes from 5,400 to 5,600, Wheaton captures nearly all the upside with almost none of the operating cost risk of a traditional miner. Silver approaching $100 is a secondary catalyst. Wheaton has significant silver streaming agreements. If you want precious metal exposure without concentration risk in a single time, this is where you can find it. Now let's move on to the next. Now we're going to be going over a company I already talked about in the past, both of them actually. Calian Group and Volatus Aerospace. It's a defense and aerospace environment. This is the highest conviction section. Now let's start talking about them. Defense. I want to be clear about something before I get into these names. This is just a reaction to what happened last week. Canada's $81.8 billion defense reinvestment, as I talked about previously, was announced on February 17 before the strikes. What the Iran conflict did do is it made the political will behind the spending completely unquestionable. The urgency just moved up dramatically. We might see more money flowing in. So as for Calian Group, let's start off with their domestic procurement and their high conviction. This is the name I've been most excited for about months, and the current situation has only reinforced this thesis. Calian builds exactly what build, partner, buy framework is trying to produce domestically. It has communications infrastructure, cybersecurity, healthcare system for D&D, training and simulation for Canadian Army, satellite ground station NATO-aligned militaries. This is not speculative. These are things Canadian government is actually contracting for right now, and Calian is one of the primary domestic providers. If we look at the earnings, we can see the Q1 2026 numbers confirmed it. Record performance, revenue up 12% to $208 million. They just signed 3-year collaboration with ADGA Group to develop next generation land training and simulation for the Canadian Army, and they just won a satellite ground station contract from the German's Federal Ministry of Defense. The contracts are flowing in. CGY is trading at $80 to $84 right now, up significantly from its 52-week low of 37.7. It's not cheap anymore, but the earnings growth and the contract pipeline justify valuation. I have a full initiation on Calian, and it's on my list for the upcoming weeks. I'm gonna have an update on it. Now, as for Volatus Aerospace, this is the speculative name on the list, and I want to be upfront about that. TSX venture listed, smaller. I made a report about them too. More volatile than anyone else I mentioned today. It's not core holding, but the thesis is generally interesting. Canada Defense Reinvestment has a specific mandate for domestic uncrewed and autonomous systems, and Volatus is one of the few Canadian companies with the production infrastructure, the certifications, and the pipeline to capture a specific procurement category. Their top 3 tech performance TSX venture and TSX graduation process is in the way. The word did not create this thesis, is supercharged the urgency behind it. If you want more TSX V defense exposure with high conviction, size appropriately, this is what it is. Now let's go on to the next slide. These are 3 more names I want to mention quickly. We have Enbridge, ENB.TO, also traded on the American market. If you want infrastructure anchor, this is more it. Moves 30% North American crude oil and 20% natural gas consumption, 5.5% dividend yield, 31 years of consecutive dividend increases. And the political protection on this pipeline is about as hard as it gets. The sovereign floor name can go to 0, pays you all to hold it. Here we have a riskier one, Kraken Robotics. Smaller, speculative, TSXV listed, Canadian maker of underway sonar and defense robotics, Canadian Navy contracts, NATO alignment, same domestic procurement tailwinds as Volatus, but in a maritime domain. It's worth watching if you want a broader TSXV defense exposure. Now let's go over this company, ARX.TO, ARC Resources. With Qatar Energy LNG halt adding a gas price spike on top of the oil price spike. Canadian natural gas producers are secondary beneficiaries. ARC is the highest quality pure play Canadian gas producer, has a clean balance sheet, low costs, and Pacific access through Alliance Pipeline. And that's the free watch list, 7 names, the thesis for each one, and why Canada specifically is interesting in this environment. Sunday, I'm dropping the full deep dive for premium subscribers, and I mean full, 4 scenarios completely mapped out, exact entry logic for each name on the list, in each scenario, position sizing, the Hormuz math, the Fed's rate path, and what it means for each of these positions, and everything will be broken down stock by stock. It's going to be one of the more detailed pieces of content I've put out yet. So I'm Jonathan Brunstein. This is the Venture Analyst. This is not investment advice. Do your own due diligence, and I will see you Sunday or in the next video.